Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over some data. And so here today is Saturday, February 15th, and I wanted to go over NEO, ticker symbol NIO, which closed on Friday, Valentine's Day, February 14th, at a price of $4.44, being up over 4% on the day, but pulling back about 1.5% in the after hours. And so, yeah, as you can see here, I got a lot of lines drawn up here. I have gone over the stock a number of times in the past, and there's one thing that I think is different about the stock price for today. And it is one of the lines that's up there, but since, I feel like I kind of want to start out with a clean slate, I am going to delete all of these drawings and just go over the line that stands out to me. But before I do that, might want to look at these moving averages. We do see the 21-day as well as the 50-day here in yellow, which is at a price of $4.40.2. We did close above that level, so I think that's looking really good. But we do have the 200-day moving average up here around $4.80. And then you might notice here I do have an alert set at $5 a share. When price gets up to there, I think that will be looking pretty good for it. But anyways, it might not be happening just yet. As, I think that we might be seeing a little bit of a pullback that might pop out when we look at some unusual whales data. But really, I just wanted to draw one line over here. And let's see, I will do a ray, so I'll have two specific pivot points, one being the high from October 28th, and then let's see, I'll do the other high being from December 9th over here. And so we can see that locked into place, and I'm just going to make that line, pretty thick because I think it's a pretty important line. And so in the past, I have made some videos, I believe around here, around December 9th, also around here, January the 6th, because it did look like we were starting to, move a lot higher, but those were actually tops. And so, I was wrong. I must say that, we didn't break out then. We were actually getting rejected at those times. But what is different about what we're seeing right now? We're actually above that downtrend, going back to the end of October. We haven't been trading above this line. Every single time we've gotten up to it, we have been rejected. But then over here on Friday, February 14th, we closed above that downtrend. So, I'm wondering if this is now going to be the time where we actually break out, getting up to $5, maybe $6, maybe $8 a share. But maybe not. Maybe we do see a pullback. And so I actually think that we will be seeing a pullback over the next couple of trading days, with trading starting on Tuesday. I believe that is going to be the 18th because the 17th, Monday, is President's Day in the U.S., so the market will be closed. But yeah, looking at this, a couple of things stand out to me. One is that 20-day moving average right around $4.26.5. Also, we do have this gap up here, and so pulling back to fill that gap, the closing price on the 13th was at a price of $4.26. So I think that's a level we might want to keep our eyes on. Maybe we do pull back and test that before what I could see happening, pull back, fill that gap, and then head up higher. And so that's kind of, what I am expecting to happen. It's kind of what I'm hoping to happen, that, just looking at this candle also with not that much volume behind it, big wick to the top side, I think that we will be seeing a pullback. And maybe next week sometime, maybe China announces some stimulus or NEO gets some good news and this starts to take off. So that's kind of, what I'm hoping. That's what I'm expecting. I do think that, like these other spikes in the price, there will be a retracement, but I think it will be to test this downtrend as support rather than resistance, getting rejected from it, pulling back to test it as support before going higher. And another thing that I could do is just drawing a Fibonacci retracement. I'm just going to do it from the low from the 11th up to this high. Let's see if I can get that right. It should be 455. Yeah, that was the high for the day. And so what we can see is filling that gap would be coming down to between the 50% retracement and the 618. And so, those are two levels that we could most definitely be testing over here, maybe coming down to around 423, seeing if that holds as support before launching higher. Also, a couple other things I did want to mention. The MACD, it does look like it has flipped green. Hopefully we do see that continue, but maybe we see a little bit of a pullback before, a bigger launch. And then also the RSI is at 54.17, so being right around the 50 neutral. It still has some room to go before it gets up to 70, which would then be in the overbought territory. But yeah, just looking at this downtrend, kind of a shorter time frame perspective, we do have the high over here from September 30th at $7.71. I've talked about $8 a share in previous videos. So, I have to point this level out up here that, I am hoping that, when China announces some stimulus, whenever that happens, I am hoping that price is able to get up to right around $8 a share. And, I think that we're starting to see just the beginning of that. But, it might take, I said a week for it to come back and fill this gap. It might even take longer than that. It might take a couple of weeks, maybe until the end of February. Maybe we get some news from China in March. So, these things always take longer than we expect. And so I do think that it is good to be thinking about this and being patient about it. But I do think that we have seen, this kind of breakout. And so I think that NEO might be ready to run in the coming weeks. But anyways, I did want to go over some of the options data just to, this really just makes me feel like I do think that there still is going to be a pullback, but to be testing that downtrend as support before going higher. And so here, looking at the data from Unusual Whales, this is the net call and put premium along with the volume traded on the day and the stock price in yellow. And so what we can see here is that the volume overall was net buying. It's been green, throughout the day, and it did end the day positive by about 22.22 thousand contracts. Also, lots of twos there in the stock price, lots of fours there. So maybe if you're superstitious, maybe that means something. I don't know. But looking at the data over here, we can see in red the net put premium did go up initially in the day, so that's bearish buying of puts, but then it pulled back to be negative for a little while, spiked up again, but then ended the day negative, being down by $87.94 thousand. And the thing that makes me feel like this is good, but not as good as it could be, is the net call premium. And so that is the green line here. We did see it spike up to a high of about $400,000 in the first hour or so of trading on the day, but then it pulled back, was negative for a little bit, but then did end the day positive, ending at a price of a net call premium increase of $127,270. So that is nice that the net call premium was positive, the net put premium was negative. Both of those things are bullish. It's just not that much money, 80,000, 100,000. It might seem like a lot depending on what we're used to trading. But as far as Unusual Whales data goes, it doesn't really stand out until it gets to be, $500,000, millions of dollars, stuff like that. So I am not too convinced that this is, going to the moon just yet. But if I do scroll down, we can see the bear bull slider. It does look like the majority, 48%, is on the bullish side, considering that there's this neutral bit in the middle, which I would say definitely leans more bullish with the increase in net call premium and the decrease in net put premium. And some other things that I can look at with this chart that also make me feel like maybe there's still some pullback in store is if I look at just the past 3 days, what we can see is as the stock price in yellow was going higher, we saw the net call premium, not being too elevated, being a little bit negative here on Thursday the 13th, coming down by over $200,000. And then on, Wednesday the 12th, net call premium did come down by about $100,000. But what we see here, what really stands out is, these red lines up here. So that's net put premium going up quite a lot. And so here on Wednesday, we saw the net put premium increase by $1.66 million. And then on Thursday the 13th, went up by $1.8 million. So, that's getting into the millions. That is increase for put premium, net put premium. And, so that's bearish. But what did we see on Friday as, the stock price really ran up a bunch is we didn't see any more of that net put premium increasing. So maybe there's a shift there and, that this might start to, run. But I just don't think that it's there just yet. I do think that we need to see a little bit of a pullback. And so I also wanted to throw up just the past 30 days just so we can kind of see what's been going on. So we do have these, two red spikes that I was just talking about, the increases in that net put premium on Wednesday and Thursday of last week. And then it looks like at the end of January on the 30th, we see a pretty big increase in the net call premium. That went up on the day by $1.45 million. And so, those are the highest spikes that we see here. We do see some selling of both net put premium decreasing here as well as net call premium over here. It's just kind of been back and forth. But over here with these big spikes in the net put premium and then not seeing that on Friday before the holiday weekend, I'm wondering if things are about to change. And another thing that we can look at over here with unusual whales is looking over here at the Greeks, we can look at the max pain. And so for yesterday, for the 14th, Valentine's Day, max pain was $4 a share. And, we closed above that. We closed at $4.44. Would have been nice if it was above $4.50, so a strike above the max pain. We got 44 cents above it, so it's almost a strike above. They go in 50-cent increments. But then looking at this for next Friday, this coming Friday on the 21st, max pain is $4.50. Also for the week after that on the 28th. So if we do get a little bit of a pullback, maybe price is dragged back notably lower than $4.50 over the next week, pull down to fill this gap. But then maybe we start to get a bounce a little bit, and then we start to go above $4.50 by, this expiration on the 28th. And then following that, max pain for the next few weeks is $4 a share. So if we can close above $4.50 on the 28th, I'm wondering, maybe we could start to see a gamma squeeze, price really take off. Maybe we start to see some news about Chinese releasing some stimulus, and this stock, as well as other Chinese stocks, really start to take off. And so maybe sometime in March, we will head up to maybe $5. And if we can get up to there, maybe we can get up to around $8 a share. And so that is what I would really be looking forward to in March. But, I can't get ahead of myself just yet. I do think that we do need to be pulling back, fill that gap, nothing holding us back before taking off to get up to 5 and beyond. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot, you guys. Take care and have a great weekend. Cheers.